Hey friends, Lucian here with the Bullish Bears team. I actually wanted to make this video here on our swing trade recaps for week ending March 9th. So I'm going to take the swing trades that were on our watch list with the watch us alerts and just recap them. I really don't have any preconceived notions ahead of time. I haven't looked at these ones really on the list, so I've been super busy all week. So I actually don't really know even what happened with a lot of them. So we'll go through step by step, see what happened, see where the goods were, where the bads were. Hopefully there was more goods than bads. But as you can see, if you take a look at our website over here, you'll see at bullishbears.com, we do our trade alerts recaps each week. So if you go over to categories and just look under, where is it? Alerts. There should be a section with our, oh, okay, trade alerts results right here. If you look on our website over here, you'll see we've been recapping our results, and we're in the high 80s to 90s every week between our day trades and our swing trades. So you can feel free to come take a look over here and see how we do. Again, our alerts really go off. So if any of you are on the fence on whether you should pay 10 bucks a month to us, I mean, just one trade on these would pay our membership probably for years. So take a look over here and you will see. So I'm going to go over here and I'm going to pull up the first one for right here. So this is the alerts that we had sent out. We sent these out on March 2nd. I think that was probably a Friday for the 5th, which was Monday, right? First one on there was stay, mark at or above 1984, right? We actually put notes in here as well. So we're basically telling you what we're looking at when we do these alerts. So you need to just look at these notes compared to the charts. And then if you go into our swing trade room or our day trade room, depending which one, we actually have two rooms now. So just to show you here on our website, we marked it so it's not as confused. Day trade room up top, swing trade room here. We do options and swing trades in the swing trade room. So basically we have rooms for everybody now. So when we do these alerts, or we're always constantly charting and talking to people in the room. So when we do this here in the morning or in the pre-market hours, we'll also send out charts as well. So we're just mapping out on charts what we're looking for exactly, right? So we're focusing on our swing trade watch list moving forward for Mondays through Wednesdays. Because it gets a little trickier during the end of the weeks. Again, doesn't mean you can't take swing trades whatsoever at the end of a week, but especially going into Friday, you want to be careful. Markets, especially with the, a lot of confusion that's been going on lately in uncertainty, you want to be careful taking swing trades into Fridays, into weekend. So we try to focus again Monday through Wednesday to give you your best shot at the swing trade. So let's take a look at stay. STAY, mark at or above 1984. So I'm going to go over here, and as you can see, if I zoom in here, that was on the, here was the 2nd, and what happened was, look what happened on the 5th, right? It actually went down. So it went up a little bit, so it did go above from 1984 up to about 20 bucks. Big deal, 16 cents. And then look, it tanked. And then it reversed and it's gone back up. So you'd be like, oh, I was wrong on that. And I was wrong on that. And here's why. Very simple. Here was the chart that I had written. For whatever reason, I kind of missed my trend line marker when I was, for whatever reason, I wasn't paying attention when I was doing the list or whatever. I didn't mark it right. And if you look here, I did my trend line a little wrong. You're going to learn when we do our candlesticks course, we're going to really teach you about trend lines. And as you can see, I missed this trend line marker. And look at this. I had it up a little too high right here. And so look what happened. I saw that buyers were I totally missed it. I totally put the line in the wrong spot. And as you can see, the buyers were kind of coming in this area over here. But if I had this trend line here, I would have saw price drop down to here, 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 right up over in here, and then price fell a little bit further. So I had the trend line marked out wrong when the buyers came in. The buyers did kind of come in, but I had the wrong trend line. So it went up, faked out, came back down, would have stopped out on that one, called it wrong, very simply because I had a bad trend line. So very good learning lesson on learning trend lines. Trend lines are so important. Again, they're never going to always be perfect, but it's very important to mark them out. And as you can see perfectly in this scenario, that trade failed because I had a bad trend line. Let's take a look at MDCO at or above 33.94. So we'll go to MDCO at or above 33.94. If you zoom in here, where was the second? Second, right here. So you'll see, where's the second? Second's right here. And then you'll see come Monday, what happened was it went up to about 30, a little bit over 30, 34, 33. And it kind of formed a doji, fell right back down, hit a base off the 20, and then it went back up 34, 36 and still going. So, you know, again, it's all a matter of what your risk management strategies are. It's been a little bit tougher lately with the markets, with that uncertainty and unsurety going on, that you got to be careful again with these trades. So when you see something like this or you see an alert, you don't just get in just because, especially on a Friday going into a Monday, you know, you don't know what's going to happen. Obviously, anything can happen over the weekend and during the week. So you got to determine your risk management strategies. You can see here on Monday, again, it just went up a little bit, came back down, held the moving average lines, and then it's moved up. If I drew a trend line right here, you can see here, it's kind of holding kind of like that triangle, and it's starting to break out a little bit. Sometimes these will break out really quickly, and sometimes they take a little bit more time. So this one went up, formed a doji. Dojis, which you'll learn about and we're posting in our video courses, are signs of indecision. This one fell back down, but again, it still held the moving average lines, and it's still moving up. Now, when you're taking swing trades or doing swing trades, you got to determine your own you know, risk management and, you know, what you're willing to potentially, you know, give up. If you want to have, I'm always for, and we're usually for promoting really tight risk management, because we don't like to lose money. But you always got to be careful, you know, and how you're trading. You know, make sure you have proper risk management strategy. All right, so let's take a look at the next one. UBNT at or above 67.40. UBNT at or above 67.40. And you can see this one right here. So you can see these gaps, right? These gaps right up here. You'll see when I did that trade 3-2, so I had it at or above 67.40, right? So you can see if I drew a line right across here, right there. This was on the second, close on Friday, and as you can see, price, again, you can see this gap. There's a whole thing, or this rule, not a rule, but a saying like all gaps must be filled. Now, again, it's a matter of when, right? Could happen in days, months, weeks, or years. You got to pay attention and watch. So this one, you know, had fallen down, big gap down, starting to move its way back up. So I called that right here on Friday at or above 67.40, and the high for the week got up to 71.40. So that's what, 67, 68, 69, 70. That's about a $4 move. Really good. Again, with any trades, you know, you can never predict anything perfectly. You could saw the first two didn't do much of anything. They actually fell down a little bit. And then this one went up, right? You know, that's where you got to determine, again, just because an alert fires off doesn't mean you take the trade. You got to look at the intraday pattern. Sometimes you'll just get a quick jump up and then it falls. So when the alert goes off, it doesn't mean take the trade. It's, you got to look at the daily pattern, see if it's an uptrend or downtrend or trading sideways, and then look at your intraday patterns to see if you're going to take that trade. And that's with any of our alerts, whether it's the day trade alerts or swing ones. You don't just take a trade just because the alert will fire off. You know, one of the, like, these ones might just fire off, like the opening bell. Like, you might get a quick 5-minute candle up and then it completely tanks. So just because, again, an alert fires off, don't take it. Look at the patterns. So you can see this one right here is kind of still forming a flag a little bit, and it's kind of broken out. So you can see, you know, kind of up here, kind of kind of broke out of a trend line here. You can kind of see this triangle kind of formation here, right? Kind of gap. It's been riding it, went up. Now it's kind of coming back and testing. So it kind of broke out, and now it's kind of retesting. You have these indecision candles here. But the gap still isn't filled yet. Now it's a matter of if or when it's going to fill. You can see there's a gap here, and there's another one right up in here. So you got to watch it, right? Got to watch and see what happens. So UBNT, that was a really good trade. That went up a few bucks, So, for any of you guys that were trading, if you trade shares, it's $4 a share. If you trade options contracts, one options contract's 100 shares times $4. That's a $400 move, right? Not too bad. That's really good money. At $400 pays for your Bullish Bears membership for what? 4 years, 3-4 years. It's a lot. It's very, again, these alerts, these trades can make you some really good money. And if you're not familiar with how to trade these, take our free courses. We tell people, there's a lot of people that want this easy fix, right? They want to come in, they want trade alerts told to them, but they don't, know how to trade, right? So there's many people that join alert services and they don't know how to buy and sell stocks. They don't know how to do options, and they just want a trade called out to them, but they don't know what they're doing. So if you don't know this or you don't know technical analysis, just take our free courses. It might take you a few months to go through them, but they're free. Save yourself thousands of bucks and learn this stuff. And that's why these videos that we're doing on candlesticks that we're sending out makes you really pay attention to them, because candlesticks are so important. These candlesticks by themselves tell a very important story, and they're going to show patterns, and then these patterns are going to teach you on how to draw things like trend lines, right? So you can see this trend line that I drew here. You could also see how I missed that one earlier. That first one that I showed you was stay. I completely drew the trend line wrong. For whatever reason, I drew it wrong, and if I drew it right, I would have been able to see a better entry point and not failed on that trade. So UBNT, really good winner, about a $4 move. Let's see here. And NRG at or above 27.89. NRG 27.89. So if you zoom in here, you'll see I had some kind of horizontal support and resistance. You can see I kind of had my trend lines drawn here. When I do my watch list video at night, I do them on a little bit like a 2-screen setup. So this is on a 1-screen setup. Just goes to show you it's easier to kind of see with a big wider screen. So you can see stock was trading in a channel, right? So with NRG, where's the second? That was the 5th. So second right here, I had at or above 27.89. which is that level here, right above a break of this candlestick here, and it went up from 27 to say 90 to 29.90 at its peak. That's a $2 move. So price, buyers came back down in here, kind of bought it. You can see it kind of bull flagged up. 9 and 20 crossover, one up, and now it's kind of bull flagging to the sideways, and it's up in the middle of this channel. And you start to see these kind of shooting star or spinning tops. This shows indecision, might be showing potentially rolling over. No coincidence, because there's resistance, right? Resistance there. But if you had taken this trade, it's a $2 move. So $2 on a $100 option or one options contract, that's $200. So you would have made 200 bucks on just one options contract, 400 bucks on UBNT, and the first two stay, and I forgot what the other one was. They were kind of duds. Kind of stay, I completely judged it wrong on the trend line. The other one just kind of did really not much of anything. But that's what happens with trades. That's why when you see a swing trade watch list or any watch list, doesn't mean they're all going to fire off. Same thing with our day trade watch list. Each day, let's say we have 5 to 10 on there, 1 to 2 are going to be probably really good. Then a couple are going to be like fair, maybe you get 10, 15, 20 cents, and then some of the others are going to be kind of duds. That's just the way trading is, because you can never predict what the market's going to do. That's why you want to be careful. Again, you don't just want to join some trade alert service that calls out trades to you, because trading's hard. Like you might get something, you might get the alert, they tell you to get in, and a few minutes later it could tank. That's why you want to be able to trade and learn yourself and understand these patterns and support and resistance. Very important to learn. So Mondays, I'd say 2 for 4, about a 50%. Really good one, $4 move excellent move. $2 move, excellent. And then the other two were kind of duds. So let's kind of X out of that one, and we'll pull up for the 6th. Actually, did I do that wrong? Hold on one second. All right, so we'll do this one right here. At or so WIT or WPX at or above 1488. So WPX at or above 1488. And yeah, let me see, 1488. And watch if price gets above 15 with resistance at $16. So look what you see here. So you can see triangle kind of formation here. You can also kind of draw a trend line, you know, from here as well. Kind of form these trend lines. So on, that was the 5th going into the 6th. So here was the 5th, right? And look what happened. The price was breaking out of that triangle. That's why I was watching it right here. On the 5th going into the 6th, it closed outside of the triangle, right? And then look what I said. I said, watch if price gets above $15 with resistance at 16. Wow, look what happened. Price did get above $15, but it went up to 1507. It didn't hold, and then it failed. Very, very important to watch these patterns. Doesn't mean this trade's now bad. So this is, again, with swing trading, this is where you're going to determine your risk management, right? This is where, if you were, let's say you did get in a trade like this, you'd consider, hey, do I want to get out of this trade because it's failing here right now? It all depends on whether you have your option, how long it's out, how far it's, you know, out there for, like how much time. We always suggest with options, give yourself enough time. Because as you can see here, you know, I would have gotten out of this if I had gotten into this one, I would have gotten out at the failure of the breakout of this triangle. But as you can see, this trend line goes back. It still is kind of holding right here, and it's still kind of within the triangle, right? So this is, again, we're determining where your risk management is. But as you can see here, support and resistance, very important. So you wouldn't have gotten in this just because it broke. You want to see it break 15 and then hold. So as you can see, watch if price gets above $15 with resistance at 16, right? So it broke above right in this area, and then it failed. So that's where you'd have to be careful on your entry and watch and see. If you got a bad entry, you could either sell it and take the loss, or kind of, again, make sure and see, is it still holding the trend line? It is still holding the trend line. It might go up, right? So string trading, there's no exact science on how long you should hold. It's just a matter of what your risk management is. Again, we use very tight risk management. All right, so let's look at SCHW at or above 54.73. SCHW 54 at or above 54.73. So let's zoom in. You can see here, trend line, right? Look at the trend lines. Price was trading in the middle of the channel. So that was sent out on the 5th, right? So I sent that on the 5th. Or sent, wait, hold on. Oh, I'm at the wrong day. Let me do this day. Let me go back to this one. That was on another one. That'll be the next one we do. Data, at or above 85.80. I was off on my days. We'll go back to that one. So data, at or above 85.80. That was sent on the 5th. Go right over here. Zoom in. And you'll see that was done on the 5th. So at or above 85.80 was this line right here, right? So as you can see, price did get above it, 85.80, and then it went up to 86.60. So that's about 80-cent move. You know, got to determine, again, you know, that's profit, but it's not great. But again, it's in the middle of this channel. So that's where you're going to determine, just because it went up and came back down doesn't mean it failed. As you can see, it's still holding this trend line. Price is in the middle of the channel. And I don't know why this chart's looking bad. Sometimes you got to reset with Thinkorswim. There we go. No, still not holding. As you can see, so it's, if you can kind of see it here, it's in the middle of this channel. So it could still go up to, you know, it's in the middle. It still doesn't have really resistance until you get up towards that 90 range. So it's still moving. It's still holding the 9 EMA. Actually hit some resistance up here and then it broke. So you can see it broke above, came back down, went back up. See this resistance line right here? You can see it's kind of got this shooting star kind of pattern up here, but it's still riding it. So at or above 85.80, and it got up to 87.60. So that's about $1.80 move. So it got up to went up $1.80 for the week, and it's still going. So you could still technically be in this one. This would concern me, the shooting star pattern here. But again, that's where you're going to determine your profit level. Some people are fine making $1 or $2. And there's other people that'll just ride it out. Maybe they'll buy options contracts or shares and hold them for a few months. So on the swing trade watch list, that's why we can't tell people when you should enter and exit per se. Again, we're not stock pumpers, number one. And number two, everybody's risk management is different, right? So, you know, that's where you want to watch these resistance levels, watch these charts that we post in the swing room, in our day trade room as well. We map these things out, but you gotta, again, number one, you shouldn't be trading with real money until you feel comfortable anyways. So you should be practicing in a paper trading account, practicing these trades. Look at these alerts, practice trading them, practice buying options contracts, and just see how it works, and practice learning the different patterns by looking at our candlestick videos. Very simple. So that one went up about $1.80. First one was kind of a dud on today, on this date, and then about $1.80, still moving upwards. That would concern me though. That's some indecision, potentially a shooting star. Got to watch out for that. All right, so let's look at K, at or above 69.20. So K, at or above 69.20. You can see here, that was done on the 5th. At or above 69.20 was right here. So at or above that one right there. And as you can see, this one went up from 69.20 to 70 cents. So you could have made 80 cents there. We got had some resistance kind of in these areas up here. You know, kind of going back over here, right? So, you know, 80-cent move, not too bad. Came back down, right? Still held the 9 EMA, kind of formed a hammer here, and got up to 70.80. So, what is that? 69.20, 70.20, and then 70.80. So about $1.60 move. Still moving up. Got to be careful. Definitely some indecision here. But another, you know, $1.80 or so. Again, with swing trading, that's good money to a lot of people. You know, making $1 up to $2 moves in a couple of days, that's really good. An options contract, that's $180, $200. If you buy, we always tell people, again, depending on your budget, but we always are very big proponents with options with a lot of time value. Give yourself a lot of time. You're going to pay more for them. We're big fans of buying deep in the money to cover yourself. So, you know, if something like this happens for a few days and stuff, you can kind of stomach and make it through. But, you know, this one, you know, made $1.80 or so. It's still heading up. Definitely an indecision candle. So, couple decent ones there. You know, $1.80, close to a couple bucks. Crocs, at or above $13.95. Let's see where that one went. So Crocs trading in this kind of this channel right here. You can see on the 5th right here. Actually, wait, is that the right day? dang it. I keep going to the wrong one. Crocs will be in the next one. HCLP, at or above 1290. So HCLP, at or above 1290. And as you can see, that was right here. So at or above 1290. Look what happened here. Went up, got up to 1327. So it broke above this resistance level. But then you have this kind of high wave kind of candle. Indecision came back down, right? So it failed. Still held the 9 EMA, got back up to 1326. I consider that a kind of a crappy trade. So again, second watch list, again, they've all popped up, but that first day, 2 of them were really good for the week and 2 of them were not so good. They popped up and dumped. That happens all the time. This watch list right here, couple were decent, and then you can see this one went up here, went up, came back down. Now for a swing trader, 1290 up to 1326, depending on how many options contracts you had or shares or anything like that, 30 to 40 cents could be good for a lot of people. I don't like that for a swing trade. I want at least $1 plus. So I don't like this trade. So again, a couple of them were decent and then a couple not so hot. So about 50-50. So they've all gone off. This is what I want to show you guys. The alerts are all firing off, but again, some gains are better than others, but it doesn't mean that these are bad trades and that they've failed so far. This is where you got to determine whether you're going to stomach staying in or longer term, or whether you take your profits and get out or cut your losses. As you can see, price is still kind of in the middle here, trading in this channel, and it's struggling around resistance. It could still move up further, right? So if you had options contracts 2-3 months from now, maybe you stay in something like this. That's only something that you can determine. We can't tell that for you. All right, let's take a look at the last one. So we'll look at SCHW. That was done on the 6th for the 7th. SCHW. This one was at or above 54.73. So that was done on the 6th for the 7th. So 54.73 was this marker right here. Had some resistance here. So you can see at or above this green candle here, right? So price was in this this channel. Looking for price, you can see it was a solid close at or above 54.73. Got up here and hit some resistance, broke above, and at or above 54.60 or 54.73, and I got up to 57.73. Right? That's a $3 move. That's excellent. And it's still, now it's getting close to the top of that channel. It's overbought. Be careful, but it still has, technically some more room to go. But after these many green days, I'd be careful. But there you go. $3 move, So, a couple of them had in the $1.80s, over $1. I think the first list had a $5 move or a $4 move, couple dollar move. Now you see a $3 move, right? So that's what you're going to find with these guys with trading. There's going to, just because something's on the watch list doesn't mean it's going to fire off. Just because the alerts go off doesn't mean they're going to be great. You got to look at the patterns. You got to see what's happening intraday. You can see this candlestick here, but you don't know what's happening intraday, and that's where you got to see, determine, are you going to stomach? What is your profit? Your risk management, how long are you willing to take? Again, if you have enough time value on your options, you might stay in on something like this. And then you got to readjust your trend lines, You can draw other trend lines as well. But this is getting towards the top of the channel. Got to be careful here. It's starting to hit some major resistance, but that's a $3 move. Really good. IDTI. Now, it's also very important to watch the SPX chart when you're trading. Having a chart up of the S&P and what the market's doing overall, so you can see and compare, and see, if a stock if I'm showing an alert that's going up that day in the pre-market and the market open, the market's tanking or having a pullback or something, then you got to be careful too. Don't just take, again, that's where you want to look at the bigger overall pictures, knowing charts and patterns, see what the market's doing overall, and don't trade just to trade, right? So IDTI was at or above 31.54. You can see that was for the 6th going into the 7th. So let me go to the 6th going into the 7th. What did I say? 34.54. Wait, 31.54. So it's right at this candlestick here, right? Right here. So the reason why I was saying that, and you can see if I put it right over here, see if price goes to fill the gap in the upper 33s. So what did price do? Broke 31.54, went into this gap. See this gap right here? I said upper 33s. What did it do? 31.54, and it got up to 32 through 33 bucks. That's a $1.50 move. Hasn't filled the gap yet. Looks like it's probably going to. It's in the gap. It's a $1.50 move. So there you go. That's a really good trade. $1.50 in one options contract, it's 150 bucks. Not too bad. Give yourself enough time value as well. As you can see, these gaps, that's saying all gaps must be filled. Got to watch it. These gaps are very important. Many times these stocks, will hit a gap, then they'll fail, and then eventually maybe at some point down the road they'll fill, but got to watch. Support and resistance, very, very important. DXCM. What a bonehead there. See that? I messed it up. So this one right here, I meant to say, see that? Watch if it breaks above, and I put it below. Thinkorswim really bothers me sometime with the alerts. So that's an error right there that we'll see what actually happens. That really annoys me when that happens. I try to look over all of them. Very annoying. But I think it worked out in my favor. So what was that? At or above, I had at or below 59.84. Watch if it breaks 60, right? So this is what I was looking at for it to break, which it actually did. It went up 59.84. It actually got up to 61.62. That's almost a $2 move. So it actually went up and did what I had thought, but it actually worked out in my favor too. 58.70. So if it was at or below 59.84, 58, 70, that's still almost a $1 move. So it worked out both ways. Got to watch, pay attention to my notes now. It's actually good. I'm putting these notes in there now for you guys. So watch the actual notes. Look at this. Sometimes, again, Thinkorswim is super annoying. Sometimes when you're putting in notes, you'll put at or above something, and then sometimes it just puts something like at or below, and it's super annoying when it does that. So that one worked both ways. Just watch, again, pay attention to the notes here and our charts. Crocs, CROX, last one. Crocs was at or above 13.95, and that was a 6th. Yeah, so it was right above this candle right here, at or above 13.95. What did I have here? Price in middle of the channel, resistance at 15 and just below 6, like that. So it went up to 13. What is that? 13.95. It actually went up to 14.50. Big deal. So about 50-cent move. Not so great, but price is still in the middle of the channel. Resistance at 15 and 16. So this could still move up. It's right in the middle of the channel, right? So you got to determine whether you'd stay in that or not. So as you can see, on every watch list, couple, decent ones. So $1 to $2 moves. Then for the week, there was a really good $4 move, $3 move. That's what happens. That's how trading is. You get a couple really good ones, a handful of mediocre ones, and then you get duds. That's trading. That's how it works in day trading, swing trading, everything. Not everything fires off. And that's why it's important to realize we're always at the mercy of the markets and news and all of that stuff. So that's why when swing trading, you want to always give yourself, again, enough time. So number one, that's if you're doing options. So if you're doing options, give yourself enough time value. Give yourself, I personally like to go out 2-3 months at least, and I'll pay more to do that just because I like to just protect myself. And I usually go deeper in the money. Again, more expensive when you're doing options that way, but I like to protect myself if I'm doing a single options contract that way. There's all other option strategies you can do as well, like spreads and iron condors, all that good stuff, straddles. But so if I'm just talking basic options contracts, if you're buying an options contract, ideally go deep in the money out a few months, at least a couple months, and then determine your exit strategy ahead of time to just say, hey, listen, what am I willing to stomach? Have my proper risk management strategy set up, very important. If you're buying shares, then you can, determine, whether you're going to get in, where you're going to get out, what's your maximum stop loss. That's something only you can determine. Again, we're very big fans of having really tight stop losses, or risk management. We don't input stop losses or stop losses in the system. We don't like doing that. We do that, the buying and the selling ourselves. And that's just because we don't trust the market makers. We feel they try to trigger stops on purpose. So that's a whole other story, but that's that's the recap for the list. As you can see, or for the week, as you can see, all of the alerts went off, but about half of them went off at least decent, if not to really good, and the other half went off that were just like mediocre. And if you had good, proper risk management, then you would have cut your losses. Again, remember, it's very important. The best traders in the world, regardless whether they're day traders or swing traders, they still fail 30-40% of the time. That's just the nature of the beast. So that's why we tell people when you get an alert, if you're looking to buy an alert service or go with a company that calls out trades to you, it's very important to realize if the best traders in the world fail 30-40% of the time, then that means their followers are going to fail a lot more, especially if they're copying their trades. They might have, if they're lucky, a 50% win ratio. Timing is everything on entering and exiting trades. And that's why we're all about teaching people how to trade themselves and being their guide. So we're giving you these alerts. You put these alerts, you kind of look at them, you look at the notes, you input them into your brokerage account, you watch and you see what happens. Practice in a virtual trading account like Thinkorswim or Interactive Brokers. Make a couple hundred trades over the course of 3 to 6 months until you feel comfortable doing this. Watch our videos. This might seem foreign to you now. That's why it's important. You got to study like crazy. Take courses, study. There's no easy, quick answer to trading. It takes looking at thousands of charts. It takes making hundreds of trades. And again, the reality is over 90% of traders fail. That's the reality. So most people don't if you're having a hard time, just remember, 90% of traders fail. So not saying you're going to fail, but it is hard. Trading is super hard. It's very, very hard to do. And that's why it's important to really practice. So, if you're not a member of our community yet on Facebook, come and join us. You can come and join us over here. So yeah, feel free to come and join us on Facebook. Like and follow our fan page over here. Make sure you head over to our website, take our free courses. We have thousands of dollars worth over here for free. We're also going to be adding candlestick courses as well to really help you to learn all of candlesticks and patterns and all of that good stuff. Just a reminder, we have a day trading room as well as a swing trading room with options. Great place, especially with our swing trades, to come and practice learning options and swing trading and practicing. Really great place to learn. And again, for those of you that are not members yet of our community, we are only $10 a month. We make things affordable for everybody to learn the stock market so you can take the next 6 months, a year of your life and not have to break the bank learning how to trade, right? And last but not least, make sure you subscribe to our YouTube channel, click the notification bell. Lots of great content over here that will hopefully help you with trading. So hopefully this video helped you, and good luck trading next week. Enjoy.